Good morning. As you said, the report this year again shows the continued divide amongst European consumers, where 2/3 of consumers are actually better off on the back of the pandemic and have been able to increase their savings significantly. We've seen the savings rates gone up a lot over the last 18 months. At the same time, we continue to see 1/3 of consumers being worse off and continuing to struggle with payments. I think what's new in this report is also the fear of inflation starting to kick in amongst European consumers, and 70% of respondents in our survey are fearing that inflation will eat out of their disposable income over the coming years. So I think that's an important trend coming out of this.
I do very few things stunningly sensibly, but one I do is never leave a balance on a credit card, Anders, as well. And I've noticed that one or two of the credit card companies are upping their rates as well. That's a very interesting tactic at this moment in time from some of the card companies. Are they worried that people are just not, they're being slightly more responsible? They're not leaving balances on cards that could be 20, 25% interest rates?
No, you're right. I think over the last 18 months, as we have seen, the utilization of consumer credit has gone down as people have actually spent more money on reducing balances and repaying also older debts. We've seen that also in our own business in terms of performance on older credits. I think that we are expecting, though, that as we are going into a post-pandemic world, that we will see more normalization and utilization of consumer behavior going back to some more normal behavior, but I think that we're still some way onto that path of normalization.
Can I ask you, Anders, where the impact has been most felt at this point? We had a financial crisis in 2008, which we know did an awful lot of damage to a lot of southern European economies, and we hoped that in the 10 years before we've had this pandemic, the governments and those countries would have done a lot to heal their economies and make them more robust and more resilient. How have they fared in your survey?
You're right. I think the Southern European economies have done a lot of work to heal after the financial crisis in 2008 or 2009. I think then again, looking at what the results of the survey, we also see that the Southern European and the Eastern European markets are the ones that have been impacted the most from the pandemic in terms of financial well-being amongst consumers. At the same time, it's also those markets where I think the inflation fears are the highest, and the Southern European markets are particularly vulnerable because if you look at the Eastern European countries, also seeing significant wage inflation coming through, offsetting some of that CPI increases, but in the Southern European markets in particular, that's not the case, and you continue to have more slack in the labor market, and therefore it's not translating into wage growth. So that contraction was expected to come through also over the coming months and quarters.